All right, so we're going to be going over support and resistance today. The reason why I wanted to go over support and resistance before candlesticks or anything else is because a lot of people, I've noticed that a lot of people, when they know candlesticks before support and resistance, they start making their support and resistance based off of where the candlesticks lay, and that's not how it works, right? So I want to go over that first because support and resistance is really the number one indicator out of anything. Once you understand support and resistance, you will automatically see a increase in your profitability when it comes to trading. And this is something that I wish I knew in the beginning. I didn't know what support and resistance was. I just was using the EMAs, and yeah, that you can tell what happened. But so support and resistance is important. So let's get into it. And I know some of you guys already know this. Hold on, y'all. Let me go to my screen real quick. Y'all not supposed to see this yet. I forgot I had this pulled up. Oh, I can't minimize the screen. Okay, everybody close your eyes real quick. Hold on, y'all ain't supposed to see this yet. Okay, so y'all did not see that. All right, so look. So when it comes to supporting resistance, right? Supporting resistance is basically think of, and I also, have like a little layout for you guys for this, but think of supporting resistance as the floor and the ceiling, right? So support is the floor. When if you're standing on the floor, you can't go any lower. And the ceiling that's the resistance, right? So you can't go higher than the ceiling, right? That's all supporting resistance is. So resistance is when stock reaches at a point where it cannot go above or it likes to reject, which we call that the ceiling. And support is where a stock likes to bounce above, like bounce on, it doesn't want to break below. That's the support. And that literally as simple as that. That's all support and resistance is. So when you're making support and resistance levels, number one, you want to get your bigger levels off of your bigger time frames. So I generally like to start with the weekly chart and make my levels from there and work my way down. And that's basically, when you go the weekly levels, that's all it's saying is the stock has had trouble at this level for an entire week. So that level is a little stronger than a level where you got it on a 5 minute where the stock has had trouble breaking this level for 5 minutes, right? So that's why you want to start with the bigger time frames. That way you can know exactly, where you want to go with the stock, right? So number one, we want to start from the weekly. This is key. Like I keep telling people this is key. You want to start from the weekly chart. So I'm going to be teaching you guys how to use Thinkorswim a little later. But you can do this on any platform. It does not have to be Thinkorswim, not Robinhood. You shouldn't be using Robinhood for charts. I know a lot of people, beginners, like to do that, but they don't even have tools for that. But TradingView, Thinkorswim, it's a couple other things out there. But generally, you want to start from a weekly chart. So if you got Thinkorswim, you come here, and I already have it set on 3 years, 1 week. It really does not matter. Just the more you go out, the better levels you can get. But like I said, you can have it at 20 years, 10 years. It's just more data. As long as it's a weekly chart, that's all that matters. So we go here. So now we're in a weekly chart, and what I like to do is a lot of people, what they do is when they make their levels, they make them where the stock is kind of irrelevant, right? So like we know right now, I'm just talking about like right now, we know that, 74 for AMD, and I'm looking at AMD, this is AMD right now. We know AMD is most likely not going to be this low for a while. So it's really no point to really waste our time, plotting that level or anything. But just for practicing purposes, this is where I will plot my first level. Now, there are characteristics for supported resistance that a lot of people get wrong, right? So number one, what you want to do is you want to have the stock touch that level at least 3 times. Some people will say two, but me personally, especially in this choppy market we've been in, I would say you want the level to touch at least 3 times, right? At least 3 times. So why did I make this a support level, right? Because once it bounced here, 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 right? So that touched more than 3 times. So when you have a stock that touches more than 3 times, that just means that the level is even stronger, right? It's already strong when it touches 3 times, but now that it touched more than 3 times, it's stronger. So we know that if AMD ever comes down to, $73, that's going to be a very hard level to break, right? Because that, it actually has never broke that level. So yeah, so that's going to be a pretty hard level to break, right? So that's all we're looking for, is for multiple touches. And the reason why you want to do this is how I get my price targets. Pretty much, that's my edge. That's my advantage in the market. I'm really good at supporting resistance levels, and I'm really good at telling you exactly, where the stock is headed. So I'm about to show you guys this is exactly how I'm doing it. There's no secret indicator. This is strict support and resistance, right? So next, you want to find the next level. So I will make this a level. Why would I make this a level? Well, as we see, it will support here, support there, and support here, right? So a lot of and as we get to the lower time frames, we have fixed the levels and all that, but we have that. That's our weekly level, right? And you will just pretty much just keep doing that. Like you'll pretty much just come through, and then for the top, you always want to plot the highest and lowest points. So AMD all-time highs right here. We plot that, and you pretty much just going in here. Now I do tell, because a lot of newbies have this problem where they try to force a support and resistance level. Put it this way, and I'm just gonna be honest with you. If it's not clear, then it's just leave it. It's not a level, right? You want clear support and resistance levels. You want clear. You want to be able to. You see, as soon as I got them here, I knew instantly that's a support level. You know, that's a resistance level. That's a resistance level. I want to make sure that it's very clear, right? So now this is where a lot of people actually miss out on. They get into their head that every single time it has to touch 3 times. Now this is where it gets a little different, and you would normally do this on the bigger time frames like the weekly. So for anybody understand that we are on a weekly chart, each candle represents 1 week, right? So that means that this particular candle, right, that means this was resistance for 1 week. So I will actually plot this because, normally we have a wick. We be having these things called wick fills. You will understand what that is throughout the mentorship. But basically, I will plot that as well. Do y'all understand why I'm plotting this though? Like, I'm just putting it right there. This was a resistance level. And when we get to the daily time frame, this level should be multiple candles getting rejected at this 122 level, right? And some of you all, we trade AMD a lot in the chat. So some of these levels might be familiar to you, before. So the whole goal is, you see, all it is like, let's say that a stock came down here. So let's say that we was buying the stock, right? We say that, okay, AMD is at a support level and I want to buy it. So and remember, it's the weekly chart. So obviously the levels are going to be huge apart, but basically, let's get back on topic. So it's a support, right? So let's say, okay, when the stock gets to support, you kind of want to start thinking buy, right? You want to say, I'm gonna show you in a minute. So when it gets to support, right, you kind of want to say that most likely stocks, when they hit support, they bounce, and then when they hit resistance, they reject, and then if they break above, then boom, we'll get to that more in detail in a minute here. So it got here. Normally, what do we say when it gets to support? We are thinking to buy because that's the floor. And normally what stocks do is they bounce. So if we were to buy AMD here, basically saying that we think it's going to bounce, obviously our stop loss will be below this level. If we have a weekly candle comes below this level, then we will cut the trade. But in this situation, it did not. So we would have bought here and we would have automatically knew where it was going next. Why? Because that was a resistance level previously. So act like none of this has ever happened, right? So let's put this in the box. So I can make, for support resistance level, it seems confusing, but it's really not. Okay, so this stuff right here, act like this never happened, right? So we would have already plotted this level because of this wick here, and we would already had our support and resistance levels. So I would have literally came in the chat and be like, hey guys, it would have been a chart pattern, but anyways, like we just talking about strictly support and resistance, right? So I would have said, hey guys, I'm taking AMD calls, And when y'all be asking me, Jay, what's your PT? I'll be like, my PT is 122, right? Exactly where I got that from. We're buying the support and we want to sell to resistance. So as we got into this play, you would have noticed, what did it do? You know, the next day we had a green candle, boom, we came up, boom, we came up. And look what we did. Right here, I'd have been looking to take profit because normally what happens, a stock normally gets rejected at resistance. And if it breaks above, obviously it broke above. But remember, we said our price target was here. So we're getting out here. And there you go, boom. So that's all it is. That is how I'm saying, like, where, you know, what's my price targets. It's literally, if you it's the next support and resistance level. That is literally all the price target is the next support and resistance level. So if you want to write down into your notes, a price target is the next support or resistance level. So let's get back into drawing some more examples, and then I'm going to show you why I plotted that wick as a resistance, even though it did not touch. Well, actually, this one is a little different because if you come here, we got resistance. We got resistance here, resistance here. This counts as resistance because the candle did not open up. The candle did not finish above. It finished below. So if you look here, that's technically a resistance. Don't overcomplicate it, guys. So this was a resistance. It did not finish above. This is resistance. It did not finish above. And this is resistance, right? So that 122 level is a pretty hard level for AMD to break, right? So that's all we're looking at. Does multiple candles have to reject in order to create a support and resistance level? So generally, yes. So you want multiple that's just to make it stronger, right? You want, because you don't want to come in here, because I be having some people do this, like in the just example, don't do this. Some people do this. They be like, okay, this candle touched this time, this candle touched this time, this candle touched this time, this candle touched this time. This is not, that's not it. Don't do that, right? You want to have at least a few touches, right? Just to confirm that level. You don't want to do it that way, right? So that's actually a level. While we was playing, that's actually a level. So, and that's all that we're doing. We're just coming in here, seeing where multiple touches, right? And that's why we having this. Exactly, somebody said me. That's exactly why we're having this class, because support and resistance levels are important. Can you break down the candles, why some have wicks? Oh yeah, so that's actually, so that's on the next, that's tomorrow's class where we actually go over candlesticks. I got you, trust me. Today is just strictly support and resistance. So basically, so that's all we're doing. We coming in here, we're starting from the weekly chart, and I'm telling you guys, a lot of you gonna be looking at it that like, oh, that don't seem like that really that much important. Yes, it is. If you send me a chart and you don't got no support, or you asking me where's the stock going and you ain't drew no support and resistance levels, then I'm not gonna answer you, because you should know that after this class today, after making support and resistance levels. Now, the more you do it, the better you will get at it. That's anything you learn in this mentorship. The more you practice, the better you will get. As a newbie, okay, your support and resistance levels might not be accurate. They might not. But the more you do it, you will start seeing the stock react to certain levels, and you could be like, okay, yeah, that my levels work, right? So you just want to keep practice at it. You want to look if it's not clear. So here we go. Why did I make that a level? Remember, support and resistance levels it can be the same thing. So a resistance level can then eventually act as a support level. So that's how you know, that's really how you know that your levels are accurate. If a stock breaks and come back down to test your level as support, right? Vice versa, right? So why did I make this a level? Well, here we go. We got resistance here, a little bit of resistance here. We have resistance here. We have support here. Look, you see that it's above, it's bouncing. We have support here. And then this week alone, we have support here, right? So that's all that I'm doing, right? So for here, I was kind of not forcing anything. I pretty much say that I want to move down to the lower time frames, because when you get to the lower time frames, it'll be a lot clearer. So let's go to the next chart. So remember, we got our weekly levels. So these are our weekly levels. A lot of people, some people do it. I don't really do it no more. But if you want to, you can color code these. So like, I know that Shine, you will meet him in the mentorship later, but Shine, he color codes his. So like, for example, he will have these, the weekly levels might be blue, right? And that's how he know, like, that's a little stronger level. You could color code them if you want to. That's up to you. I kind of trade the same stocks because I already kind of know what level is a weekly level or not, but starting off, definitely, when is the best time to draw support and resistance line? So you want to do this anytime. Like, you want to do this every single time you get into a trade. You want to do this every single time you get into a trade. You never want to take a trade without knowing your support and resistance level. So I wouldn't say it's the best time to draw them. You should automatically have support and resistance levels, because this is how you know where the stock is heading. Not no person on Twitter telling you what's going here. You want to get on here and say, this is where the stock is heading based off my support and resistance level. So looking at this chart right now, we didn't even put our other levels on here. Looking at this chart right now, AMD right here, this is the current price that is set around this candle. This is the current week that we're on. So AMD is currently holding support, and most likely is going to go to the next target, which would be 122. So we can see AMD at 122 this week, right? So that's all support and resistance level is, right? Is, that's all it is. So let's go to our smaller time frame to make it a little more better, right? So now these are our weekly levels. Like I said, you can color code them if you want to. You don't have to, but these are your major levels. I call these major levels. So maybe you say if the market is bullish, it might go to 122, and if it is bearish, yes, exactly. Everybody in the chat that's on it, that's exactly what I mean. That's exactly. So right, while we on the topic, right? So currently AMD is actually holding this 113 support. So most likely, if the market is bullish and if it's pushing up, it's going to go to 122. Now, if it breaks below 113, it's most likely going to go down here to that 99.71. But really, I actually already know this level. Like I said, on a daily time frame, when you get lower time frame, you get it better. This is actually 100. And if you traded AMD with me ever, we all know that 100 is a major level for AMD. It is so hard to break this level. So you could say this is a center triangle, but it's a pattern here that I'm gonna show you guys when we get our levels. Do you constantly update your levels every few days? So when it comes to the weekly levels, and we're going to get into that too today. So when it comes to the weekly levels, I don't really update my weekly levels, because once I make them, the price really don't change too much to make me update them, if that makes sense. I might come if I'm, want to just check them, or if I see the price acting a little bit different, because understand that you're not going to be extremely perfect when it comes to support and resistance levels. You're not a computer, you're not an algo that these hedge funds be using, but you basically want to be around. So give or take your support and resistance levels at least 10 to 15 cents off. If you come in here and your support and resistance levels are off like $10, then we have a problem. But if it's a couple cent off, maybe even 50 cents off, it's okay. It's okay. You're not going to be 100% perfect, but generally you want to like let's say that we say AMD, for example, let's say that we say that our price target for AMD is 99.71. This actually might be 100. That's why I say give or take a couple of cents and go from there. Let me get some of y'all questions out of the way while we're right here. So yeah, somebody asked me, do I constantly update them? No, I don't constantly update them. Now, when it comes to day trading, I'm gonna show you, you have swing trading levels, and then you have day trading levels. Day trading levels, yes, I update them every single day. But as far as swing trading levels, no, I leave these on my charts. How does this help with select your contract? So yeah, I'm gonna go over that as we get when we get the understanding of all the levels first. And then, because I actually got like an exact play that I'm calling tomorrow off of AMD, right? I'm calling this tomorrow, and you will see why. I guess whichever time frame you are also tells you when the price may hit the target. Like if you're looking at a weekly, it'll hit that price that week. Daily means. So now that depends. Kinda, yes. For me, I only play weeklies. It's very rare if I play 2 weeks out or whatever. But yeah, so the bigger the time frame is, the more time that it'll probably take to get to that. So for me, yes, today is Tuesday. This is our weekly candle. We seen right here. I mean, the next candles will tell you the same thing. Remember, each candle represents 1 week. We seen AMD go from 110 to 122 in 1 week, right? So now that we on this candle, we can pretty much say it can literally do the same exact thing, right? versus if we were to say, what is a good example here, you know, we would say we was buying it here. This was October 4th of 2021, and it took until November 29th. So let me get my math right. It took about a month or two, a little under 2 months to get from here to here. And, you know, it took from here to about another 2 months to get here. So that's where okay, so that is another thing that I do is if I'm on a weekly chart, it took about 2 months to come from here to here. So if we basically were to take puts here, we will kind of automatically know like, okay, well, it took 2 months to get to this point. So to get back down to that level, it'll probably take another 2 months. In this example, that's exactly what it did. It took another 2 months to get here. So like, let's say that I was saying, okay, we buying off support here and we want to get it to here, then obviously it's not 100% that it'll get there in 2 months. But basically, like if we were to like base off of, if that was like our general target, and we know like the market do whatever it wants to do, but if 164 around this area was like our general target that we wanted, I would not buy no weekly contract saying that AMD is going to go from $100 to 164 in 1 week. That is, and that's another reason where people get messed up as when they look at the time that it took to get there, they don't know how to time their plays right. Now, I only play weeklies, so for me, it's a little different, and I'm gonna show you guys kind of how I gauge the market. But yeah, like if you were like a real deal swing trader, this is exactly what you would do. You would say, well, it took 2 months to get from here to here, and then it took 2 months from get to here. So if I want to see it back up here, potentially, I will buy at least 2 to 3 months out again for my target to be here. So that's like kind of how it works when it comes to time frames. But we have if you go on the syllabus, we have like an actual session about time frames in general, and that'll help. So did that kind of make sense? Did I answer your question? Okay. Swing trades are placed swing trades are placed on a weekly. So when it comes to swing trades, I normally like, and I'm not trying to get off topic because I still did like we still have to get over this session. But when it comes to swing trades, you can either place them off the weekly. Like this particular trade, you could place this off the weekly. If you've seen a pattern, and like I told you guys, I only make trades if I see something that I like on the bigger time frames. But yes, you make swing trades off of the daily and the weekly chart. So right now we're in a weekly. You base your swing trades off of the daily and the weekly chart. Sometimes 4 hour, 1 hour, but we'll get more into detail on that. But yes, this would be considered elite play. So somebody asked me, based on the weekly, would you say this is in an uptrend because price did not break? Yes, I will say that AMD, when you look at it from a bigger picture, and this is why I tell you guys, think bigger picture, guys, right? Let's not get off topic, but think bigger picture. AMD is still in a uptrend, right? It's not in a downtrend. So overall, bigger picture, AMD is still bullish, right? AMD would not be bearish unless it breaks the trend. Good catch. But anyways, let's get back on topic so we can, but I'm glad that you guys are actually understanding, you know, what's going on. That's exactly what I like when I'm saying looking at the bigger picture. That is exactly what I mean. So overall, so let's say you made your support and resistance levels on a weekly, and I'm like going to show you guys exactly how I place trades off of my levels. But so you made your big levels, right? Then we move on to the daily chart. So we come down to the daily chart. We got the 1 year and 1 day. You could do whatever you want. You know, we're just gonna keep it simple. So now we're doing the same exact thing on the daily chart. Now that you see, now we just make the levels here. So somebody asked me why did I put that level, that one level where the wick was. I'm trying to think that was around right here, I believe. So no, let me go back to it. My bad, y'all, because somebody just asked me that. This was 726. Well, that's gonna be real far back. 726. We have to go there. But basically, that is the resistance level. So we come here and we pretty much doing the same thing. So we just looking for more than one touch. I mean, more, 3 touches. So, oh wait, let me put my tool back up. So we just go in here. I mean, you literally just got to practice with it, and that's going to be your homework tonight. FYI, you just come in here. It takes a minute to get used to them. So you see why I made that a level? Resistance here, support here, resistance there, resistance there, I mean, my bad, y'all. We had resistance here. We had support here. You see the touches, support, touches, support. And then we got resistance here, and then currently resistance here. So you see why I made that a level? You know, you have your support and resistance, right? So you're just going to come in here and you're literally just going to be eyeballing it. I know it sounds like, oh, why do I have to do this? You know, if you want to know where the price is going, you have to do it, guys. There's no way around it. You have to do it. Trading is a job. You have to do your job correctly. So we just come here and just try to find more levels. Now, what I like to do is, because somebody asked me, you know, Jay, do you sit up here and make levels like all day? Well, yes, I got my levels, but I also don't make them to where I don't think that the stock price is going that weak. So like here, I don't really think AMD is going to go all the way to 133. I mean, but this one we can plot that just because that ain't too high. But you know, up here, I don't. If you want to, you can, but as of right now, I'm only focusing on in this area right here where price is currently at, because I am a short-term swing trader. When I do swing, I don't look to swing for months out. I'm not investing. I am like doing like my goal is to buy something, sell it no later than 2 days. So I don't really care what it does all the way up here. You know, I won't really mind that until it gets up there. So I like to focus on just what it's going to do in there. Can levels connect from wicks to bodies? Not always wick to wick. Yes. So like sometimes you will see that let's see, you will see that, and it's kind of sometimes it's not going to always be wick to wick, right? So right here, and like I said, it's not going to always be 100%. Oh, it has to like bullseye touch, right? But basically, you know, this is support, and you see right here, this particular candle, this wasn't even a wick, this was a body, and that was support. So it don't have to be always wicks. You just want to have it touch, right? And then that is where you can start finding your levels at, and you can start making your trades. So we'll go here, we'll make this a level. Why? Resistance, support, resistance here, and it ain't gonna always touch. Like that one just blew right past it, so obviously we would just ignore that, but we're just looking for more resistance, and then support here and resistance. So are y'all noticing that? Like, let me know if I'm like kind of confusing somebody. Let me know, because like I said, I can go over it, but this is something I really need y'all to know. I just want to make sure y'all know this. Now let me show y'all a trade right now, and we're gonna go to more levels as well, but I just want to show you right now something that I would have caught, right? So let's say we in the chat, you know, we chilling, right? And ignore all of this. So let me draw my little thing so y'all know which candles to ignore. And somebody probably already know what I'm about to see. So boom, act like this haven't happened, right? So exactly, I would have woke up that morning and I would have said, hey, AMD, trigger for puts 133. I mean, trigger for puts below 133, price target 125, 122, right? Let me put this in the chat. I'm gonna literally tell you exactly how this would have played out, right? To make it make sense. It'll start making sense in a minute. So I'm gonna put it in the chat. This is not a real play, guys. Don't try to get in this. AMD trigger for puts below 133.25. PT1 125, PT2 122, and it's literally this easy, right? So boom, this is exactly, and I just put it in the chat, this is exactly how I would put in a watch list. Exactly what I'm doing. And sometimes I won't even, like when y'all be like, I just call the signal and I won't like put it like this. That's because I'm obviously already doing it. But right here, and the reason why, and this is where we got our levels. So we kind of already can tell, what do we have right here? We have and we're gonna get on chart patterns. Me and Gary are actually teaching that. So what do we have here? A bear flag, right? So why am I saying trigger for puts at 133? Because that is support. Once the stock breaks support, what is the next price target? The next price target is the next support and resistance level. So what did it do? It broke. And what did it, remember, this hasn't happened yet. It literally broke and it hit our target. Boom, PT1 hit. Then I said PT2 hit. And then if you would have had other levels, remember, we got these levels, ignore this. We got these levels from other days. And you see how they respecting the same levels to the downside, right? So that's exactly how a trade would have went. We noticed the pattern, and then we took the break on our levels, and boom, it hit all our levels, and boom, we're out this trade. Same way going to the upside. So before we go more to making more levels, real quick, let's do a trade that I think that I'm going to call tomorrow. The candle has to close below. Yes, but in this particular, it's kind of how safe entry is. You want the candle to close below, but I'm going to show you guys exactly like the entry, like how do you enter this trade? Because this is the daily chart. So a daily candle not about to close below. You like, it's already going to have made this move. So, but I'm going to show you how to, like, you want it to close below that level on another time frame, and we're going to get into that in a minute. But quickly. So tomorrow, I'm actually liking AMD for calls, and I'm finna show you why. Remember, these are already our levels. I don't have to make no more new levels. These are already our levels. So what am I doing? I'm looking for a pattern, and boom, what do we have right here? We have a falling wedge. I don't know for people that's like, oh, I don't even know the falling wedges. We're gonna get into it, but I'm just using the levels, make sure the levels are with my pattern, right? So it actually already broke out. So how would I say this? Can somebody give me an example on what would I say tomorrow, right? AMD price is currently at 115. How would I call this trade out? Somebody type it in the chat. How will I call this exact trade out if I was, this is actually a daily chart, so this will actually kind of be technically a swing trade, but how will, like, what will be my trigger and what will be my price targets? There we go. Calls above 118. I know they say 118.43. Honestly, I normally just put the whole number, but if you want to be safer, what are my price targets? There we go. There we go. Good job, y'all. And it's that simple. It is this simple, right? So how I would have said this is we would have had, hold on, somebody actually said push under 113. Hold on, let's, I got something for that, right? So I would have said trigger for calls 118, PT1 122, PT2 125. That's exactly how I would have called it. And where will my stop loss be, guys? Where can somebody tell me where my stop? There we go. Perfect, on the money. So my stop loss is really 114, or usually 114, 113, however you want to put it. What I like to do is, so like for me, this is just me. This might not be for everybody else, but for me, I like to do it to the whole number. It just depends on the stock. AMD likes the whole number. So 113, I just round it to 114. A little better stop loss. But this is, I'm telling you, this is how easy it is. So if somebody said, would I wait for confirmation? Yes. So like, let's go down to the smaller time frames just to like show you where would you, like, how would you get in? So you will notice that, boom. So this is how it would look on a smaller time frame. So you would have seen what you liked on the daily, right? We seen, okay, boom, we got our levels, we got our big levels, right? And we know that we want to take calls above 118. So then you will come down here to your actual entry time frame, which will be the 5 minute. We enter the 5 minute, we enter on the 5 minute, right? We don't enter on the daily. That's why some of you guys go red instantly, because you enter on the daily. We want to see if we say calls above 118, we're using our big level, right? We say calls above 18, 118, 118.43, whatever, however you want to say it. It's really 118.43 on this particular stock. So we want to say calls above 118.43 or 118.50, or if you want to do safer, this should be 119. It's really totally 100% up to you. you basically can say, all right, well, I want to see a 5-minute candle open up and close above 118.43 before I take this trade. And you're literally just going to use your levels and just take that trade. Remember, the 5 minutes for the entry. This particular trade, since it's on the daily chart, this will be a swing trade, right? This will be a swing trade because it's on your bigger time frames. Now, there are times where I will see something on the daily and I might say day trade. That's normally because I'm not trying to catch this whole move. I'm just probably trying to catch the next level. But generally, this setup is a day. This is a swing trade. But the market we in now, it kind of sucks to swing anything because, this can go here and then turn into here, and yeah. Okay, somebody, this is a good question. I actually get this question a lot. So why not the 1 minute? All right, let's go to the 1 minute. The 1 minute has a lot of fake outs, right? So let's say that we were to say, okay, guys, we want to take calls above 118.43, right? If you were on this is the 1 minute chart, guys. If you want a 1 minute chart, remember what I just said. We want a 5 minute candle to open up above 118, right? 118.43. What did the 1 minute candle do? This opened up above, so you would have got in right here, like, oh yeah, I'm up 5%. Boom, instantly faked you out, came all the way down. So that's why I don't like the 1 minute. It's fake outs. It's nothing but fake outs. I mean, literally. So, and if you want to be a little more conservative, like let's say like you just like, no, I really don't want to get a fake out. You would come down, like it's up to you on what time frame you want to enter on, right? So if you can see right here, if you would have tried to wait for a 15-minute candle to open up above, you would have noticed that it literally rejected that level, came back down, tested it again, rejected it again, right? So that is literally like, the more conservative you are, the better it is. So for example, not gonna lie to you guys, it's hard to prevent fake outs, but it is what it is. If you would have took this trade today, and also understand this, you have to understand the current market as well. Like, I know you want to take calls, on this particular trade. This is actually a trade that a lot of people would have probably got in at and probably got shooken out. But I'm gonna just be honest with you. As we get through this mentorship, you won't fall for nothing like this. Because technically, yes, boom, this candle, here it is right here. This candle was rejecting. Then it finally went above. Then it ended up turning to a wick. So it never opened up above. This is resistance. This is when you have something like this, that means buyers drove the price up and we're going to go over candlesticks tomorrow, and they took it all the way back down. So this is exactly called a fake out, right? So then this next candle, this actually was above and then it came down. So that is what we call a fake out, right? It faked the breakout. But as a trader, if you got into this trade and if you took this trade, that would have been on you. Number one, because the current market was coming down anyway, right? So you would have never even got into this because the market was coming down anyway. So how you gonna take a breakout if the market coming down? You ain't got nothing backing it up. You ain't got nothing backing this breakout up. And then now I'm not gonna lie, you are gonna learn tape at the end of the mentorship. Tape right now kind of sucks because big money not really buying any of this. It's really the algos playing with us and all that. Like, they using their machines. They're not actively trading. Their machines are doing all of this. So, but anyways, yeah. So like, you don't want to trade against the current market, right? So like, yes, it might be above that level, but if you see SPY and the market is all turning red and all coming down, and you don't want to take this. You don't want to be in calls when the market is all the way red, right? So you would never took this, right? So you see how it went above, and if, like I said, if you just use the 15-minute, it actually never broke 118. It just wicked above it, but it never broke above 118, and it rejected. Now, somebody said this. I seen somebody say this in the chat. They said we could have took puts off of here. Exactly. I'm so glad that you said that, because guess what? Remember, what did I say? Price normally rejects resistance. That's kind of what you like. Obviously, sometimes we want to play the break of resistance to go to the next price target, But understand, keep it in the back of your mind, when a stock gets to a certain price target and its resistance, you kind of want to be like be prepared to sell, right? Be prepared to take some profit off the table. So we got here. Normally, I actually would have probably I call it my little grab and go strategy. I'm gonna teach y'all that, but the market ain't been right for that. But I would have actually played the rejection off of this. And can somebody tell me, if I played the rejection off of this 118.43, where was my price target? 113. Thank you. You seeing it now. Y'all seeing it? It's that simple. It is 113, 114. It's that simple. What did the price do? What did the price do? Remember, these levels came out from the daily. These are daily levels. I didn't make these levels off of the 15-minute. I didn't make these levels just now. These levels came from what time frame? These came from our bigger time frame, right? This 113 is a daily level. This 118.43 is a daily level. So what happened? It rejected, and what did it do? It came right back down to that level. You see how the levels are hidden? You want your levels to hit. You want it. So the best feeling in the world is when you see the price ain't even did it yet, and you see that it hit. So that's what we're focusing on. We want our levels to hit. So that is all. That's what I'm telling you. This is why I wanted to go. I don't know why Keith put the support resistance for week 2. You gotta know this now. This is number one. This is number one. If you don't know, honestly, a lot of traders only trade support and resistance. They don't care, but they don't use nothing else. They don't use nothing else. They don't use patterns. They don't use nothing else. They use this. They only trade between these lines, right? So let's go back. So I use chart patterns because no, are we going to there? I was just showing y'all. We definitely going to the 4 hour. We're not done with support and resistance left. But I was just showing y'all how like entries, as far as entries go. But I use chart patterns because chart patterns still give me, when trading, you want the most confirmation, right? That is your goal as a trader, to gather up the most confirmation to place that trade, right? So yes, we understand support and resistance levels, but we also want to have, we want to have a reason for it to bounce. We want to have a reason for it to make that. What would your entry be on this call? So we go here. So my entry for AMD would be, trigger for calls will be above 118.43. And now I'm not gonna lie to you guys. I'm not gonna sit up here and say like I'm perfect when it comes to, oh, my put. Easy. What is my put, guys? Can somebody tell me what is my target for the puts? If we would have broke below. Now, I'm going to show you. Yeah, it would be 1 under 13, but I'm finna show you guys in a minute. Because I know you're probably looking like, well, it didn't come down there yet. I'm gonna show y'all in a minute when it comes to day trading. Right now we're going just strictly kind of off of swing trading, but I'm gonna show y'all real quick in a minute, like as far as day trading. But right now, we're gonna go back. So ignore this. Like I said, we're gonna go over chart patterns and stuff like that. That's gonna be with me and Gary. Because Gary is a walking chart, so he's gonna be a little better at that and helping y'all. So all right, so back to the support and resistance level. We ain't done yet. So you made your levels off of the weekly chart, you made your levels off the daily chart, and somebody probably asking, Joe J, why do I need so many levels? Why do I need that? Why can't I just use these? Because you want to know what's going on in between. Unless now you don't need this many levels if you a real deal swing trader. If you when I say a real deal swing trader, if you finna sit up here and buy 5 months out and literally sit, if that's you, all right, then delete all of this in the middle. Keep just these two. But if you're a person that day trades or want to buy something and sell it the next day, the more levels you have, the more you will know where the stock price is going, like that current time. Over time, we know that AMD is going back to 164 potentially. Nothing can Bob the Builder go on mute? I cannot hear anybody. I'm gonna mute them. Okay. Anyways, so can y'all hear me? Let me make sure I didn't mute myself. Okay. So yeah, for this particular setup, I would just you could set alerts on TD Ameritrade. That's what I'm gonna go over and teach you. But all you would do is you will literally. That's why I like TD Ameritrade. I don't know if TradeView do it, probably do, but I will literally just go here, click. I will literally click the level. I will right click the level. Let me go back. I will right click the level that I want to take. Hold on, guys. I will right click the level. And then at the bottom, it says create alert. I will go here, create alert, and it will say mark, and then you will hit is at or above. So that means, and then you could change it a little bit. So right now it kind of automatically kind of put it where it thinks that you clicked it. So if we said our level was at 1843, it was at 1858. So we'll just change it to 1843. So now it will alert you if AMD is at 11843 or above it, and you will click create, and you will have this right here. You could change the color of it. I make mine gold, because that's just what it is. And it literally will sit in your charts like this, and then it will pop up an alert and tell you that's there. And that's when people are like, Jay, how are you watching all these charts to know that it's at that level? I'm like, no, I just set an alert. And when my phone, I try to set it a little bit above it, like a little bit, like, because I don't really like setting it exactly at that level. I like to set it a little bit before, so kind of like as I'm like getting time to like pull it up on the charts, then I can kind of like watch it get to that level and see if it actually breaks and see if I want to take that trade. So I said it like maybe in this particular trade, I might set it at like 1830, just, you know what I'm saying, just so I can be aware a little early. That's all. So anyways, so now we X that out. So now, all right, so you created your weekly level. So that did it, and should be your like top-down analysis, right? So number one, the first thing you guys should do tonight or in the morning, it don't matter. You should go and start from the weekly chart. You start from the weekly chart. So you write this down in your notes. Start levels from the weekly chart. You want them to touch at least 2 to 3 times. And then you want to come down to the daily chart, and then the 4-hour chart. So now let's go on the 4-hour chart. So here we kind of look to see if we can find any more levels. I kind of don't see anything. I don't want to force anything. So I would just come down to the 4-hour and find some more levels. And honestly, guys, I'm just be honest with you. The way I chart, I kind of treat all my levels the same. So we know that some levels are bigger than others. Some levels are more important than others. But if it's on the weekly, daily, or the 4-hour chart, I kind of treat them the same. Just gonna be honest with you. I treat them all the same. Like I treat each of those levels as major levels. But that's just me personally. It works for me. So now we come to the 4-hour. As you can see, we have more levels. And you see why, everybody see why I made that a level. It touched here. It touched here. It touched here. It was resistance here, support here, resistance here. And there you go. So I made that. And that's all I'm doing. Like, I'm telling you, it's that simple. I know it looked like it might be hard, but I promise you, you need to know your levels. You want to have those price targets. On the weekly, how far back do you go? So, and there's another question that I get a lot. How far back do I go? I go back as far as I need to get levels. So like, I think the max is 20 years, but generally you don't have to go back that far. But like, let's say that I'm trading. I'm trying to think of a good example of a stock that I had to do that on. Ford was a good one. Really quick, let me go. I'm gonna go back to AMD in a minute. Let me go back to Ford. Ford was actually a stock that I had to go back a little while to get their levels. Okay, I think it was here. And you will only have to go back so far on stocks like Ford or stuff like that, like stocks that's been here for a minute. Most of the stocks that we trade haven't even been here for a minute. So on this one, you see for my time interval, I will hit back to 20 years, just because at that particular time, four has never. What was it at? It was. I got messed up on this trade. I'm not gonna lie. I remember this trade because I was like, oh, four has never broke this level. It ain't gonna break. And I kid you not, that four made me a witness that day. So, all right. So this is an example on where I had to go back multiple years to get a level. So on this particular trade, this is exactly what I seen on Ford. What was it? Hold on. Exactly what was it? Hold on. I think it was it here? Hold on. Or was it here? Hold on, guys. I gotta remember. I mean, obviously it's like around this area somewhere, but right here. So basically, this is what your chart's gonna look like normally because it's gonna be like on a shorter. So it's gonna be like this. So I'm gonna be like, oh well, like act like you couldn't go back any further, right? Because it's gonna be on the one. It's gonna be on like 3 years or whatever. So act like you couldn't go back further. So you'd be like, okay, well, where's four going? Because there's no more levels to make, right? There's nothing. So on this particular trade, I actually had to go back a couple of years. Um, okay. So on this, y'all see on this trade, I actually had to go back a couple of years to kind of get an accurate level on Ford, right? And that's how I was able to kind of say, oh, well, if Ford breaks here, it'll go there. And then you get to all-time highs, and all-time highs is a different story that we will have a class over. Not gonna get into all-time highs today. I just want to focus on support and resistance levels. But after it broke that, it went into all-time highs. Obviously, you could not plot that because it never been there before, right? So then somebody asked me, do I update my levels? Now, this time I will have to. Why? Because now the stock has created a new level. So I would already have these levels, and I just come in here and make some new levels, blah, 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 whatever just do that, make some new levels, and boom. So now if Ford ever come back up here, I have levels for Ford to the upside, right? But let's go back to Andy. So that's all I was showing you. Like I will go back as long as I need to make levels. That's all. Like don't overcomplicate it. You don't have to go back that far. You just want to have clear levels. That's all. So now we go back to the 4 hour. Yes, these levels are automatically saved unless you personally delete them. Now, there are times where I will end up having too many levels, so I would kind of delete them. I normally will. I haven't learned how to, if there a way to save my levels and then come back. I haven't. If there are, I will figure that out one day. But I've been kind of just like, and it helps me with practicing as well. I kind of like would just delete them and start back over. But if you don't want to do that, which a lot of people don't, they just leave them on here. But it is kind of harder to see clear price action with the levels in the way. But it just have to, you got to have your levels. So you got to do what you got to do. So anyways, we come to the 4 hours. So all we're doing is just doing the same thing. I know it's going to get like, yes, I'm using Thinkorswim, TD Ameritrade's charting platform. It's called Thinkorswim. Yes, I will. I have a tab in the chat. We're going to go over my setup at a later time in the mentorship. So all we're doing is going in here and making more levels, and kind of when you can't find any more levels. Now, this is where I'm a little different than others. So I normally, I don't like to chart levels on the 30-minute or the 15-minute. I kind of just go to the 1 hour next. And then after the 1 hour, I just go straight to the 5-minute. So the 1 hour pretty much. Now the 1 hour, especially now, this is new. This is why I say in trading, you gotta journal, guys. You have to journal your trades. You have to write down what happened in this trade. Why did it happen? And the reason why stuff changes, right? So back then we didn't used to day trade off the hourly chart. We used to only day trade off the 1 hour, but now with so many fake outs and fake pops and all that, we actually create a lot of our day trading levels from the 1 hour. I'm just being honest. That's something that we had to adapt to. So yes, we still keep our levels on here. We still treat them, but now levels that we found in the 1 hour, we can use those as day trading levels as well. All day trading levels are levels that are closer to each other. So like And scalping is even more closer to each other. So like that'll be something like let's go here. We're not going to say this is low. We're just using this example. Let's say that you had like a level of, resistance here. And then if it break above, we would have said this, right? If it had more candles there, boom. So like that's kind of like a day trading, but overall, you just want to get on the hour, do the same thing. I don't want to complicate nothing right now. I'm just going over. This is exactly what I do in the mornings. I come here, come plot new levels right here. Why did I plot that? Support here, support here. That's 2 touches. Then you come over here, it was more touches here. Please show us how to do a stop loss at the end. Yeah, of course. Oh, no, that's number one. I think I told y'all that stop losses are number one. Like, if this is something that you don't learn from the mentorship, you're going to learn the stop loss. Okay. Yes, so we're going to get to that, to the pre-market levels. Do you use the 5 minute for entry and hourly for a day trade? Yeah. So no matter what trade I'm taking, I'm always going to use the 5 minute for entry. Always, no matter what trade I'm taking, unless it's like a leap or something, then that's totally different. But I don't do leaps so like that often. So I'm not even going. You don't really, if you're doing a leap, you kind of just buy it whenever. You could buy it from the weekly if you want to. But yes, I do not look at the 1 minute when I'm scalping. I don't even look at the 1 minute when I'm scalping no more. Like, I don't even know. I don't. The 1 minute is pointless to me. So yeah, this is where I want to say, when it comes to time frames, what I normally do is, Bryson just texted me something. So what I normally do is, in this market, that's what I'm saying. You have to stress that a lot of things have changed since last year in 2020, right? So back then, somebody drew something on the screen. I don't know how to get it off. Whoever drew that, delete that. Thank you. But I see what she was trying to draw though. But so it just threw me off. So I was finna say, okay, yeah. So in this market, it's so many fake outs. What I like to do is I like to enter on the 5 minute. So think of the 5 minute, and we're going to get more into time frames in another class, but think of the 5 minute as your entry. This is what be making me mad, because y'all be sending me stuff. They be like, it's a inverse head and shoulders on the 1 minute. It's a head and shoulders on the 1 minute. It's a bear flag on the 1 minute. It's this on the 1 minute. I don't care what's on the 1 minute. I really don't. I'll just be honest with y'all. I don't care. I don't care if I'm in $100,000 in puts and y'all tell me it's a bull flag on a 1 minute. I don't care what's on the 1 minute, because you understand, the shorter the time frame is, the shorter the move. So that is why, if you guys remember, when we was tagging Apple consistently that one time, it was because Apple broke out on the weekly time frame. So remember when we was on the weekly chart, the weekly levels are a lot bigger. They're a lot spread out. So that means the stock makes a larger move, right? So that's all it is. Versus if you see someone on the 1 minute, it's only going to be like the next candle is going to be, the play is over with, right? Versus if we see something on the, like this, okay, right here. Let's go right here. This is a prime example. All right. So we got a little wedge here on AMD, little wedge, whatever you want to call it. So normally that would have been our price target, that high, and you see it was already right here. So this is at 100, and then our swing target literally would have been, what level is this? 122, right? So 122 would have been our target from 100, right? So that is a big move, right? This is a bigger time frame equals bigger move. So it literally went from 100 to 122, right? Versus if you would have seen this wedge on a 1 minute, it would have probably went from 100 to 120 cents, So that's why I'll be telling y'all, I don't care what's on the 1 minute, I'm trying to find an example. Um, mm, guess you can try to fit some right here. So remember, and when you get into chart patterns, normally your price target is the high of the trend line or whatever, blah, blah, blah. Big on that, but you can have a little pattern here. So we basically would have, our price target would kind of be in the top right here. Like I said, we get more into this when we get into don't ask me, we get more into this when we get into the chart pattern classes. But we would have said our price target is about 116, the top of this trail line. Remember, this is the 1 minute, so it's a little harder. So literally, we would have bought it on the break, and this break, it broke at 115.58, and we would have sold at 116. So literally less than $1 move, right? So I mean that's nice for a scout, but I'm just saying, like, if I was let's say I was in like long-term puts, let's say I was just like in some decent puts or whatever. This move kind of would not hurt me that bad. I mean, don't get me wrong, it's a $3 move. I would have been definitely crying, but like it would have came right back down. So that's what I'm saying. I really don't care what's on the 1 minute, because it don't, like, this is a bad example, but it don't have an effect on me as much now versus, like I said, this is a $3 move. We all know in the stock market, we could come back from a $3 move in the wrong direction. But now let's say that on this, like, let's say that, like you said, okay, Jay, I see a falling wedge on the daily and it breaks. Okay, yeah, you can't come back from a $22 move in the wrong direction. You're going to be crying. So that's what I mean when I say I don't care about the 1 minute. If I'm in a longer play, I don't care about the 1 minute, right? So if I were you, especially in this market, I would just stay off the 1 minute. I mean, it is a headache. If you like having headaches, yeah, that's fine. Yeah, you're gonna be crying. A clown. I knew y'all was gonna try to make a joke. Yeah. Can you imagine trying to stay calm in that trade? Like, yeah, it only went up $22 on me, but I'm good. I'm good. Nah, your account is blown. So yeah, so that's what I mean. I don't really care what's on the 1 minute too much. So that's that. So, like, as far as that is that. I know, don't get me wrong. I ain't never said it ain't never happened before. I've definitely been in the trade that it went against me. Tesla would do that all the time, but that's different. You gotta understand. You might can come back from a $20 move on Tesla, but you might come back from a $20 move on Tesla. But AMD, a $20 move, is zero. Your contracts are worthless. Anything I say, like, I ain't teaching anything. I'm teaching I've never, anything that I'm teaching I came from my own experience. I'm not teaching y'all nothing I went on YouTube or something. Like, I've been through all of this. But so, like, right now we've seen that wedge, and AMD is currently in another one, right? So, I'm trying not to get into chart patterns. This is not the class, but we could say that is going to be a bigger move, right? It's on a daily time frame. So let's get out of that. Let's finish our support resistance class, guys. But real quick, is everybody understanding, like, support and resistance though? Like, do you understand? Like, if you don't, you can say I don't. I'm telling you, you can say I don't. I don't want nobody saying that they don't, but I do want you guys to, like, go after class to please go make support and resistance levels. I don't completely. Okay, cool. Yeah, I'm finna get to the supply and demand next. So, all right, cool. So let's finish the support and resistance levels for a little bit real quick. So, all right, boom. So you got your weekly levels. Remember what I said, I'm gonna repeat it again, and I'm putting in the chat tonight again. You want to start from the weekly chart. That is the weekly chart. You want to get your levels from there, the ones that you can see. You come to the daily chart, make new levels. You come to the 4-hour chart, make more levels, and then you come to the 1-hour chart. These are going to be your most respected levels, right? So boom, you try to come fit some more levels in. If you have to adjust some, you can adjust them so where they make sense. I'm gonna adjust this one. Why am I adjusting it? Because it makes more sense there. When you come here, you going to have to fix your levels a little bit if they don't make sense. I adjusted. That current level was 122.40, 122.44. I brought it down to about 122. Why? Because it was resistance here. and then it was support here. So it was a little clearer being there. That's why I touched it. Can you give us? Yeah, I got you. I got some. Actually, any stock that I give you, I have levels for every stock that I trade. Every single stock that I trade. So that's how the homework is. When you post your levels today, I'm gonna just put a thumbs up or a thumbs down on each one. So out of all y'all, I'm gonna put a thumbs up or a thumbs down, telling you guys that you might want to work on this. You might want to fix something. Me and my team are going to be looking through every single one. And so that way you can kind of get like, where did you mess up at? And like I said, everybody's support and resistance levels are not going to be the same. Mine's might be different from Bryson's. Mine's might be different from Keith's. But generally, you want to kind of have them in the same area. So, like, for example, my level might be, 118.84, but Bryson's might be 118.50. But you want to have them, you will like to see them around the same spot, right? Versus, now if my level was 118 and then Bryson's was 150, and we saying that that's the level, something is off, right? Somebody's off. So so now we will have a class later on that will focus more on confirmation. That's I wouldn't say there's one thing to say, this is confirmation. With trading, you use everything that you learn to make confirmation. So it's not like, okay, I see a chart pattern, that's confirmation, I'm taking a trade, right? It might be, I see a chart pattern, I see buyers on the tape, I see bids holding, I see all this, like, that's where you put everything. My EMAs are crossing. The more confirmation you have, the better. But there's not one thing that's going to say this is confirmation, if that makes sense, right? It's a lot of things, your trading strategy, kind of how you will want to, gauge, what's confirmation for you. For me, normally a chart pattern is really, a chart pattern with some volume is really all I need to confirm the break, or that's just me. That's just me. But some people literally, I'm telling you right now, like some people literally need a lot of confirmation. Like they will not take that trade if they have no confirmation. Like if they don't have 10 things that say get in that trade. Isaac, his trading strategy, a little different from mine. Isaac likes a lot of confirmation before getting to a trade. Me, it depends. So volume, when it comes to volume, we're gonna get in that. Let me finish this so I can go. I'm gonna come back to that volume thing because that's actually why I got the volume stuff. Hold on, let me get back to y'all questions real quick so we can move on. I'm gonna give y'all some stocks. Do you want all support resistance levels on any charts to touch? At least that's what I'm saying. Put in your mind that you want to have it touch at least 2 to 3 times. Like just automatically, so you build good habits as a trader. Like I'm trying to start doing good habits in the beginning so you don't have to worry about bad habits, right? So you want to already get used to having 3 or more times, right? So right here, this was 1, 2, 3, 4, 5, 6, 7, 8, 9. So this touch 9 times, and you keep going back at the touch even more. But you want to get into a habit of making sure that your levels touch multiple times. That's just kind of what you want to do. You want to make, now if you have a weird wick, like that's why I said, if you just have like a weird wick, like something like this, if that on the bigger time frames, you could plot that, because technically that means one day it had trouble, one whole day it had trouble breaking 122. So you would kind of want to plot that, because when you come on a 1 hour, you're going to have basically 8 candles, literally 8 candles that, because you would already, if you miss it, you already going to end up making that a level later on throughout the day anyway, because you're going to have 8 candles that had trouble breaking that 122. So you would have already had it 8 touches on the lower time frames. So that's why I'm saying you're going to add that wick, just because on the bigger time frames, just because on the smaller time frames, you're already going to add it. So I might as well add it there. So let me finish making something real quick, get back to your questions. So like I said, you can make, I would have probably, I'll probably do this one just because it's close, if it breaks, to keep going above. But I would probably call this is pretty much done. I'm pretty much done, that I've made my levels. This is kind of what your chart is going to end up looking like. So I know it looks like it's a lot of clutter, but it's really not when you really get into it. Literally all you're doing is you make your chart pattern, or whatever you see that you like to trade, you make your chart pattern. And like, don't let all these lines confuse you. It's literally just telling you where the stock price is going. That's why you have them. And you're literally saying, okay, if we break 118, we going to 122. We break 122, we going to 125. We break 125, we going to 127. We break 127, we going to 130, and so on. That is all we're doing. Literally, it's that simple. It's not. I told you, trading is not hard. It's that simple, right? Now, as it gets to these levels, you kind of want to watch price react to these levels. If you start seeing, let's go back to the 1 hour where we started rejecting that 122. Where did we start? So like, okay, let's say that you bought it. Let's say that you bought it. Okay, it broke 118. Let's say that you brought it. Obviously, when it broke 118, you see how, like, number one, I just want to show you guys like how it literally goes to the next level. So look, it broke 118. We know that our next price target is 122. You kind of want to watch price at that level or start trimming. This is normally why I say start trimming. If you start seeing price start wicking at that level, then you can kind of like take some profit. Or what I like to do is, as price start reaching that level, I start to add a stop loss in profit. So if it starts rejecting that level, then I can, it'll like stop me out. And we're going to get into, I don't want to add no indicators, but normally you would have like an EMA holding this. Actually, real quick, let me add that just real quick, just to kind of show you real quick. We're not going over indicators today, but I kind of want to show you when it comes to holding a little bit. Let's make it a little bigger so you guys can see it. It's probably going to be not to be the 9, it's probably the 21, but we finna test it out. Oh, so actually, no, you're fine. Yeah, you can hold this. So normally what I like to do is, if it breaks above, as long, technically, in this particular trade, I would have still took profit around here. But technically, you really don't get out this trade unless it breaks below the 9 EMA or whatever. But we'll get more into detail on that. But generally, the whole goal is, once it breaks a resistance, is to go to the next level of resistance. That's all it is. And same thing, vice versa for support. Let me remove this real quick so people don't start asking me about this. We're not learning this today. One thing at a time. So easy way to think of support and resistance is that support is the foundation and resistance. Yep, that's what we said earlier. Yep. The resistance is the ceiling and support is the floor, right? That's all it is. My question keeps getting buried. Which class? Let me go look at the thing really quick. The class that will be over confirmation will be, it will be week 5, the first start of swing trading. That's where we will go over like confirmation and stuff like that, because that includes in the strategy. How do you choose any particular stock to trade your regulars? That will be in a different, I'm telling y'all, we only going to support and resistance today. I know y'all want to get into it. Now, if you want me to answer that question outside of the class, then that's fine. But we are going to have a class over there. But I can actually ask me that today, like once we get off the class, and then I can put that in the chat for you guys. But we still have a class over it. When making those levels on all time frames, no matter what the time frame is, it will be our price target. Yes. So these levels will still be your price target no matter what time frame. Obviously, the lower the time frame you go, which I'm about to show you in a minute. So this is the swing trading part. So we kind of got over swing trading, kind of day trading. These are just your bigger levels. That's all. So now we're going to go next to the 5 minute in a minute. But basically, your price targets are the same. Just now, like, understand that if you were scalping this, obviously, from 118 to 120, 122, that would not be your price target. If you're scalping, that is too wide of a price target for scalpers. That is too wide. For a scalper, it's going to be way less, right? So that is different. But overall, like, generally what we do as traders, I know a lot of us not are scalpers, but as we do as traders, Normally these are like, your price targets are going to be the same throughout all time frames. Just the lower you get, the closer the price targets are, which you can base how long the time will take to do that. TOS doesn't show open interest though. Yes, it does. Yes, it does. Yes, it does. I will show you how to work TD Ameritrade. Actually, TD Ameritrade shows it a lot better than Robinhood. No, I wouldn't say a lot better, but it filters it better than Robinhood. But I still use Robinhood. So generally, what I do is I have Robinhood up on my phone, and the reason why is because I understand that I know a lot of you are not, you don't run a group chat or anything, so you don't really have to do that. But I have to send y'all signals in the Discord. That's what you guys are in the Discord for in Blueprint. So I have to send you guys signals. So I'm using my phone to send you signals. So for me, it's just convenient that Robinhood is on my phone so I can look at the contracts that I want to get in with you guys, right? But with TD Ameritrade, I would just go over here to my trade tab and then go through the options, and I will actually pull up my watch list already here, and it already show me everything. I'm gonna teach you guys how to do that. You will know exactly how to use this trading platform. It's a lot, but you will know how to use it. On entry, we are waiting for the candle to close above. Yes, you want the candle to close above. And I'm just being honest with you guys. I'm trying to teach y'all good habits because, like I said, I'm not perfect. I have bad habits still that I work on a daily basis. Yes, you want to, I'm just going to tell you now, you want the candle to close above. And then normally what I like to do is if another candle closes below, you want to cut and reload the trade if it goes back above. That way you're not like taking the hit. Or you could just hold based off of your stop loss or whatever, however you want to do it. But sometimes, because I don't want y'all getting on me in the future. Y'all be like, Jay, you didn't wait for the candle to open up above. You got in way before the stock even got there. Sometimes I will do that because I'm not gonna lie. Sometimes when the candle opens up above, it sends. I mean, it will leave you in the dust. It will literally leave you in the dust, right? So yeah, but understand another thing y'all have to understand is the type of trading style. This is generally how you want to do it, but depending on your trading style, you might do things a little differently. So for me, I don't really like breakouts. I like buying a dip, but for a person like Isaac, he like breakouts. So for example, this is exactly me and Isaac are two different traders, right? This is exactly how I would have did this trade, right? Isaac would have told y'all right here, trigger for calls. I'm not saying that he would, obviously the stock pulled back. I'm just saying he would have said trigger for calls 118.43. You guys would have took, obviously it came back down. You would have got stopped out. Me, I would have took it here at that support. I would have waited for the bounce. I would have took the bounce and then I would have rolled it up and sold at that resistance. That's just me. I'd rather play the bounce than the break. That's just me. But as a trader, you will figure out what you like most. The reason why I prefer the bounce instead, now, obviously doing it that way, you have to be a person that don't get shooken out of FOMO, because that's exactly what's going to happen. If you have FOMO, you're going to be seeing this run up and you're going to be like, oh, I got to get in. Me, I'm kind of really patient when it comes to trading. I will literally just sit here and wait for it to bounce. I will literally wait for it to come back to support and wait for it to bounce, and I took this. That's just how I am. I don't really like breakouts. I would have literally, my exact thing I would have said, I would have told you guys in the chat, hey guys, AMD is now at a bounce level. I'm taking AMD calls. My stop loss is if a candle opens up and closes below 113. And if it don't, we ride it up to 118. That's how I would have took the trade. That's just, I'd rather buy the dip than buying a break, right? Because to me, the risk to reward, which we're going over this week, the risk to reward on this trade, I'm not gonna say out yet because I ain't trying to give up next class. But for me, that risk to reward is a lot better than playing a break. It's just me personally. You can take it how you want to. That's just how I like it. So on this chart, 107 is support. Maybe. I don't know if we're still on the same chart. It's 107 support. Let's see. Yeah, this is support another level, but I would have plotted this as well on this chart. So for this particular chart, I would have had this. Remember, I said we do document the wicks just because SPY is one of the stocks that respects these type of wicks. So how I would have did this trade was I would have said trigger for puts below 110, basically, because rounded up 110, PT1 109, and then PT2 107.50. Right, that's just how I would have did it. It's really up to you. And then if you come over here, it should start making sense. So there you go, the same levels, support, resistance, support, kind of just whatever, resistance and support. So you see how I didn't even have to come look at these to confirm those levels just based off of here. And one of these are a daily level just based off of here. These were levels previous times, like we go back, right? So that's all it is. So in a normal swing scenario, do we take profit on AMD if it hits PT1? If I'm trying to swing, seems like okay. So in a normal market, I will trim AMD. So let's go back to the daily chart. In a normal market, I will trim AMD at PT1. So PT1 to be here, I'll start like trimming some. But overall, I still think that the price is going to break that and go up here. I would trim some like in a norm, not now. Now, if AMD hits that price target, like let's say tomorrow, because this is actually one of the trade. I do think if the market is decent tomorrow, I do think AMD will go to 122 tomorrow. That's just me personally. If the market is bullish, I think we could get to 122 tomorrow. So in this particular setup, yes, I will take profit at PT1 because this is a daily support and this is a daily this is a daily level and this is a daily level as well. So remember, these are harder levels to break than smaller levels. So yes, in this market, I would take profit at 122. If that made sense. Do you use the 15-minute? Yes, I use the 15-minute so I don't get shooken out in this market. Yes, I do. I use a 15-minute a lot, so I don't get shooken out. Like you still can get shooken out in a 15-minute, but the shakeouts are a lot less than the 5-minute. Isn't understanding market structure the same as learning? Yeah. So understand market structure is like the whole structure. When you and Gary will get more into that, but support and resistance, supply and demand, chart patterns, just overall market structure, all of that is just like it's all in one. That's all under market structure, right? If you understand market structure, you will understand the market. And that is where a lot of newbies don't understand. It's how, the market is actually aligned. Like, how do it work, and that's the problem. Okay, so yeah, next. All right, so now we're done. We're done with we're done with our big levels and everything. So now let's get ready for day trading levels. So last year, and this is where it sucks because I know if some of you bought the advanced course, I told you guys I deleted and made new levels every day. This year is a little different. The stock's actually moving. So I want to make sure I make this clear. Last year, SPY did not move like this. If you notice, SPY is now moving $10 in one day. Like last year, that wasn't a thing. So last year, you had to create new levels every day because the stock was not. I'm talking about day trading now. We're off of swing trading. I would have said now, like last year, you would have came here, you would have came to the 5-minute, and you would have like deleted all of this, or you could have kept it if you wanted to. But normally you would have just deleted all of this, and you would have made levels strictly off of the 5-minute for day trading, right? The current market we in, these stocks are moving. You do not have to delete your levels. I'll recommend that you don't. These stocks are moving now. Like last year, we didn't have stocks moving. SPY wasn't moving $10 in one day. Not at all. Go look at it. Go back to your charts and look. SPY was not moving no $10 in one day. SPY moving like a Tesla now, right? So back then, a stock AMD going from 113 to 118 was in 2020. that kind of would have been kind of crazy, right? You know, that's kind of a big jump. You know, $5, they wouldn't even move that much back then. I remember when we used to trade AMD, and I think it'll move like $2, right? Apple will move like literally $1 to $2. Man, these stocks out here moving $7 now, $10, right? So you can use these stocks are hitting their bigger levels. So for you, I would just honestly, I would just keep those levels on there. And then like if you want to make a little, you know, some closer levels, just because you don't want to risk it, you can. So what I would do next is after I made my bigger levels, I will come in here and look for some better, you know, some more levels that are a little tighter, right? I want to find some levels. Maybe I don't want to hold to 118. I might want to find some levels closer. Like I said, it's really up to you. So like here, I will make a level here. The reason why, what did it do? It touched here, came, touched here, resistance here, resistance here, support here. So, you know, that could be a little closer level for you, especially with scalpers. So this is a scalp. You know, we're getting more into, that's all scalping is. You're finding closer levels. That's all. So like if you're a scalper, you know, you would see, if you see AMD come down to 113.80, you will literally say, okay, I'm buying calls here and I'm gonna sell it at 114.30. Quick scalp, boom, 10%, 20%, I'm out, right? That is what a scalper do. So you just find the levels closer, right? You know, I will make that here. That was a high of day. That was resistance, resistance here, support here, support. So you got, are y'all kind of making sense? So what is currently AMD right here? What is it at right now, right? Can somebody tell me what is AMD at right now? What, like, what is it? What level is this is at? Like, what is it doing? Thank you. Hidden resistance. Perfect. Perfect. So AMD is hitting resistance. So now, obviously, the market is closed. It probably will be above or below this. So now, when I come to the next day, let's say I want to scalp AMD. Let's say AMD stays under here. How would I call this trade? Can somebody tell me? How would I call this trade for tomorrow? If I was looking for a quick day trade, how would I call this trade? Okay, cool. So I kind of see somebody said it. There you go. Yeah, there you go. So there's two ways to play this, right? It's at resistance right now. We see that's resistance. Look, what did it do? It touched here. What did it do? It rejected, came all the way back down, right? Came, tried it again, rejected, came all the way back down, right? So then when it broke above, where did it go? It went down, it went up to this 118 level, right? So pretty much the same thing. So if AMD breaks, this is actually 117 for the people that forgot the little 95 cent. That's closer to 117 and 116. But I would say trigger for calls 117, and what my price target would be that 1843. And remember that that's a daily level. Remember, that's why I'm saying now. Oh, keyword. This is something that I want to tell y'all too. Now, this is where I change my charts up a little bit. My bad. I'm glad I caught that. So remember, these are my daily levels. These gold ones are my daily levels. Now, if you ever see me, especially live traders, you might see this a lot. I color code my daily levels, like my little day trading levels that I just made that day, because I delete these levels at the end of the day. Now, these levels I delete at the end of the day. I normally make these levels red, and I make it, if you ever see me like in the chat, if I'm calling something and you see my charts, you will see something like this, right? You will see my red lines. I color code them. That way I know to, like, this is just a level that you made for that particular day. Delete them at the end of the day because they're not your daily levels, your bigger levels. And if they're just going to be in the way, right? So I keep these here because, you know, if it breaks there, you know, if it breaks this little small time, remember, this is a short term. This is a 5-minute resistance, right? So it's not as strong as this resistance, right? This is a 5-minute resistance. This is a daily resistance. So I will literally wait for it to break above 117 and then ride it up to my next target at 118.43. That is literally as simple. Now, let's say it rejects. If it rejects 116, 117.90 or 117, my target will be 114.34. So yeah, I kind of see where I'm getting that from. Like, these are the red lines are my daily levels. And I make these now. I do make these every day. I make new daily levels every day. Like, little stuff like that. I make that every day, and I make them. I color code them that way. I know, like, yeah, it rejected it before, but it's still not a super hard level to break. AMD can break this 117 fairly easy. It's the 118 that it will have trouble, right? So, like, I'm not saying that it won't. You see, it got rejected before, but understand that we did not find this on the bigger time frame. We found this on the 5-minute, so it can break that a little easier than breaking that, right? So that is literally that. I mean, that's that. You anticipate. So do you wait for the candle? So yeah, somebody somebody says I anticipate. I want you guys to wait for it to break above. As your account get bigger and you understand the market a little better, then yeah, you probably can anticipate it. Because I'm telling you, you will see times, I promise you, if the market is pushing and AMD might not be at my trigger yet, you will see me get into AMD early, right? Anticipating that it break. Understand that it's adding an extra level of risk, and that is where your own risk should be determined, and go from there, right? And then pattern recognition wise, you just want to be mindful that patterns still apply. Right now, AMD is in a rising wedge. This is the 5-minute, so this is not going to be there today. I mean, by the time the market opens, this will already be done. But this is a rising wedge, so kind of how that works, goes up, boom, boom, and then it makes a move down, right? So if we seen, for example, real quick, I'm gonna let y'all, I like to get y'all interacted in class. So let's say that I want to take puts here. Let's say that I want to take puts on AMD I'm basically saying it's going to reject here. I'm trying to find other confirmation that's going to tell me that AMD should reject here. My confirmation might be, okay, I see a rising wedge, bearish pattern at resistance. That's another thing. When we get into chart patterns, that's why I wanted to teach you guys support and resistance first, because as we get into chart patterns, you want to make the patterns make sense. You can't be drawing patterns if they're not at a level that makes sense. What did we say? We said resistance means you want the stock price to generally reject, right? That is what's resist. It's the ceiling. Stocks do not supposed to breach that level. It's not supposed to go past that level. So if you want to run puts, you want to see some confirmation that's telling you that it's potentially that it can't go past that level. So we have a rising wedge. So we know the next move should be down. After it rejects and comes down, we want confirmation with chart patterns at levels. That's why I wanted to teach you guys levels today, because I wanted you guys to see this. A lot of you just draw patterns in thin air. That's why they don't work, because you draw them in thin air. They don't work because they're not at a level that makes sense. If it wasn't a level here, that means it could just stretch. So daily levels are reached before weekly levels. Yes, perfectly. Daily levels okay, 5-minute levels would reach way before daily levels, right? The tighter the level, the more likely it is to reach it quicker. So like in this particular trade, understand this is the 5-minute. So it's most likely going to hit that in the next 10, 30 minutes, right? Versus the daily time frame, each candles represent one day. So it's going to take a little, you need more candles to get to that level, right? So that's why I be telling you guys, just be mindful of that. So yeah, that is when it comes to the smaller day trading time frame. So I hope that made sense. All you're doing is just making levels. And somebody asked me this real quick. Let me make sure I don't get missed. None of y'all questions. Do you chart top of the wick or the top of the, I try, okay. So I try to do the wick. Like I normally try to do the wick, but honestly, when it comes to support and resistance levels, I honestly just want you to find where it touches the most. I try to do the wick. I don't try to pierce my candles. As I try to do the wick, because that means the wicks are a little better than piercing a body. Like I obviously gonna pierce the body. I'll pierce to here, but the reason why you want to see the wicks is simply because that means price. That's actually showing you a real rejection, right? So like, let's say that I would just put it through the bodies. then if let's say that you were in let's say you was getting into puts right here, right? And you just drew it on the body. And you know, a lot of traders, they would have, you know, when the price broke broke that level, they would have cut because they're like, oh, whoa, hold on now. It didn't broke resistance. I gotta get out. But whole time it was just wicks. So I like to draw the wicks to kind of keep me from getting shaken out. You know what I mean? So like, you know, that's kind of why I do that. Like I don't like the bodies because like wicks, this is price. Understand, if you were in puts here, you're going to be red on this wick. Obviously the price came back down, but that's why I like drawing wicks. You're going to be red, right? So are you looking at the 5 minute from yesterday to have yes, exactly. Christiana, yeah, exactly. I'm using my levels from previous days. So if I got to go back a couple of days, you know, if I got to go back, you know, 5 or 10 days or whatever, you see these levels are, I mean, these levels are literally levels from other days as well. Like it was support here, like, you know, this was days later, you know, because remember, we really got it from the next day, right? We got that, but then if you come here, all the way here, you know, it was levels here. Look at that wick, right? You know, look at that. You know, levels are hitting. Look at that. These are days before. Look how it's reached. That's what I'm telling you. Levels are important. Look how it's hitting the levels days after. I mean, days before, and we just plotted them just now, right? So that's all it is. Do you say it's easier or harder to break through smaller time frame? No, it's actually easier for a stock to break through a smaller time frame. That's kind of like what it means. So like if you find like these red levels, these are smaller time frame levels. So the stock can just fly right past them. But if yeah, a stock can just fly right past them. But a daily level is a lot harder. Like you're gonna actually need like a push to get past these daily levels. Because remember, the stock didn't have problems, especially those weekly levels. You got to understand, out of 5 trading days, the stock that had trouble breaking this level for 5 days straight. So it's not going to just break that easily. Versus these little daily little levels that we just made for that day, it'll go right past them. Not all the time, but it'll just go right past them. And also, like as the mentor should go, like we're going to have like live sessions where we get on and you're going to like see me do all of this like quickly. Like you'll just see like it just flow with it. You have to do this every day, guys. I just do whatever one touches more. Sometimes it's leg, sometimes it's the body. Yeah, most times it's a mix. Yeah. Do you draw daily support resistance levels throughout the day when you're trading? Um, no, not really. It's like I might draw some little smaller daily levels. So like, um, let's say like in the morning. That's a good. I like that. Let's say in the morning. Let me show you an example of that. Let's say I already had levels. Let's say in the morning, I might make this a level, right? At that particular trade right here, I would have made this a level. Why? Because I would have, you know, color coded it to tell myself like, hey, you just made this level today. This is not like a for sure level for time, you know, time's sake. So like, okay. So for this particular trade, I would have like, okay, I would already have these levels. I wouldn't have this one yet. I would have made this a level because, and on the opening drive, the stock hit this level, tried to hit it again, and it sold off. So then I know like, okay, watch that level because it can break and see what it did when it break, right? So that, and I kind of use that as a gauge. So here we come back here, you know, I know that earlier after it broke, I still keep it up. You know, I literally, if I'm making a level that day, I'm gonna keep it the whole entire day. Why? Because watch this. I would have made that level this morning, you know, price did what it did, sold off. So then I would have noticed later on throughout the day, if I'm looking at AMD again, I would have noticed it sold off from that earlier today. So I would have been like, okay, maybe I can take puts because it sold off earlier that day. And you would have noticed that if you would have did that, you would have been correct, right? You would have caught this move down. You would have literally seen that Like, okay, well, it rejected earlier, then it broke above. So then you would have kind of kept in your mind, like, okay, it can either reject or break above a little bit, or it's really up to you, right? It's up to your risk tolerance. And you would have, if you would have took this particular trade, I would have took puts, simply because it really didn't break this level earlier. This is a daily level. I already had this level here, so I would have actually took puts here. This particular trade I would have took puts. And that's literally that, right? Like, that's that. That's exactly what I would have did. If AMD opens above, are you going to wait for the bounce? Yes. So I like bounces. That's just what I like to trade. Like, let's say AMD opens up above 117. I would probably take the bounce instead of trying to catch the break. It literally just depends. I like retest all the time. Like, I kind of like, for example, this is just me, right? This is two different traders. Like I said, in the mentorship, you're going to learn. You're going to be faced with all types of different trading ways, and this is the type of trader I am. Okay, so Isaac would have said, "Hey, I'm taking calls above 118," right? Or he would have said, "I'm taking calls above 117." If a candle would have opened up above, right? I would have, and it hit that, I would have waited for it to pull back. If it don't pull back, then it just don't pull back. Boom, I missed the trade. No FOMO here. I would have took it on that bounce here. I would have waited for it. It broke, it pulled back. I would have took it on the pullback. You see wicks, and it's another thing. We're gonna get into this. When you start seeing wicks, because people see this. That's why I say wait for the candle. This is a prime example on why I say wait for the candle to finish above for calls or below for puts. What did it do? It never finished below. So a lot of this is what happens to a lot of newbies. Unfortunately, they see this, they're like, oh man, it's breaking. I'm getting into puts. They get into puts just to see a reverse and go turn up in their face, right? This happens a lot. Me, I just gonna tell you, I play the bounce a lot. When you start seeing wicks, I like to buy. I like to buy. Stop losses if a candle finishes below. I like to buy at wicks. I like this. This is the exact trade that I will. This is a exact trade that I would be in. I seen it break, pull back, start seeing these wicks. I might have probably bought it here, went red a little bit. It's never opened up below. It never finished below. Rolled it, took my play, rolled it for calls. So when y'all be saying, "Oh, Jay, how do you be holding?" I'm just telling you what I'm doing. It ain't closed below. Now it sucks because obviously, if it closed below, it's probably gonna drop a little faster. You're gonna lose money a little quicker. But hey, I mean, it's trading. It's trading, guys. You're not gonna be right all the time, right? So I would have took this. I would have played the bounce and I would have rolled it back up to 1843. This is actually potentially something that can happen tomorrow. Not gonna lie to you guys. AMD could, like somebody just asked, AMD actually could open up above 117. I will probably take it on the bounce and then ride it back up to there. So that's just me. We'll see. A false breakout is considered cents in price action, not dollars. Depends on the stock. Tesla might be dollars, AMD might be cents, Apple might be cents, Amazon might be dollars. It just really depends. But so yeah, that is that. That is pretty much, support and resistance. Like, it's that simple. For your homework tonight, I want you guys to go, and I'm gonna take some questions in a minute as well. For anybody else, that's pretty much done for today. I hope support and resistance made sense. I hope that made sense today. This is literally like the game plan. Like, you have to know this. So for homework tonight, I want you guys to go in. I will send some stocks. I want you to go in and basically create some support and resistance levels. Start from the weekly time frame and work your way down. And I want you to make levels for tomorrow. Like I actually want you to go in. Yes, you can set yes, the paper trading literally looks exactly like the real thing. Yes, you can use a stop loss in paper trading. At least 3 to 5 stocks, go in there. I want you to word it just like I do, but I want you to send a chart as well. So I'm finna give y'all like a little example real quick. I'm gonna put it in the classroom. So let me see. I got a lot of charts on my phone. Classroom. So, and put this in the homework submission, not the classroom. Lead the class. Don't say that in the classroom chat. It's just like people can see the homework. Homework example. So I want you to post the charts with it. I want you to post charts with it. So let me see if I got one in my phone. And you're gonna have as many price targets as you want, or just one. So this will be a homework example. Homework example, BA. You don't have to do calls inputs. You could just say whichever direction you think the market going to be. But some people just do both. Isaac do both. Like he make levels for calls and puts just in case. I do just whatever I think the market is going to be that morning. So BA trigger for puts below 200. This is actually a real play. Below 200 and PT 190. And I want you to do this for 3 to 5 stocks. It's really up to you how many ever you want to do, but just get that practice in, right? And boom, that's what I want it to look like, you know. And there you go. That's your homework. And I'm going to yeah, that's pretty much the homework. And I'm going to like react to your homework. So other than that, that is pretty much it. Somebody asked me, do I ever use Fibonacci homework? I mean, Fibonacci. No, Isaac has started using that. Gary, I think Gary uses it. I have somebody that's going to be teaching you guys Fibonacci. So should we support resistance or the trend lines in there? I would say just supporting resistance right now. I know I literally just sent y'all a picture that I had. Like my phone is filled with stock charts. But if you want to, like, if you want to add your whole analysis on the charts, you can. But right now, I'm just looking for your support and resistance levels. But like, if you want to add your analysis, go for it. Somebody asked me for one time frame. Yeah, just give me like one time frame. But if like treat it as you want to take it tomorrow. So kind of send me like if you were to take the trade tomorrow, right? So like on BA, literally, I can actually pull this chart up real quick for you guys. So kind of like give y'all an example before I get off. All right. Probably a little better on the just do one chart. Certain stocks it look a little better, but basically the reason why I said BA trigger for puts 200 because right now it's still at 197 whatever. That's our daily levels. I haven't made like our intraday levels yet, but basically BA can move down there in one day. So that's why I only put PT of 190. But if you want to make closer ones, you can. But basically, under 200, we know where it's going next. You know, if you want to add the trail line, if you do want to come down and make some more levels so you can have better, I would do it just like this. Hold on, let me show you real quick. If you want to have closer levels, just real quick, it's literally the same thing. Like I don't want y'all like getting confused on what time frame to send. Right here is a level. You see right here, it was support, 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 not really resistance, support. Let me see. I'm making my levels real quick. Right there is another one. So like if you were to day trade it, you can send however you want it. But like if I was day trading, I would kind of put it like this. I would say BA trigger for puts, just for example, really the trigger for puts now is 197, but trigger for puts below 200, PT1, 197, PT3, 194, PT2, it's been a long night, y'all. BA trigger for puts PT1, BA trigger for puts a break below 200, PT1 197.60, PT2 193.80, PT3 192. And then PT4 190, you can literally do it however you want to do it, as you were, like, put it as you were to take this trade tomorrow. Because that's the reason why I'm telling you how to do it, like, as you're taking this trade tomorrow, so you can actually see it happen. People don't like it until they see it happen, right? But if BA under 200 tomorrow and the market is bearish, BA going to 190 or really 192, that's a little closer, so however you want to do it. When do you think you can review the gamma and theta push again from class? Okay, so how the sessions work is we will have, like I said, since the mentorship is so long, we will have breaks, right? We're going to have like a couple of breaks. You might have like 4, maybe 5 throughout the mentorship, to where we're going to have breaks and like have Q&A sessions to where we can review something. But generally, I don't want to review like anything that we just went over until the end of the mentorship. Like when we get ready to get out, like anything that I have to go over, I will go over that again. I don't care if y'all try to say, let's go over the whole mentorship, probably gonna have an attitude. But if enough people say it, hey, I guess we gotta go over the whole mentorship again. So I'm probably gonna let Keith do it at that point. I probably wouldn't even want to do it. So other than that, guys, I want you to do at least 3 to 5 charts. Really, if you want to do 3, that'd be fine. And just put your level just how I did, literally just how I did it. And boom, me and the admin's gonna react to it and give us a little time to react to it. It might take us a day, but I'm gonna try to get back to everybody, because not everybody gonna do their homework. You know how it was, you know how it is. So not everybody gonna do it. But yeah, that's the homework for tonight. I really want you guys to do that. I want you to see these levels, so you're not always asking me where's the stock going. Yes, it's due tomorrow before the next class. Next class is at same time tomorrow. It's due before next class. I have applied for options on TD and rejected. Do you have any tips to get approved for cash account? Call them and tell them. Did you apply online or you called them yet? Yeah, call them. I promise. They have. That's one thing I like about them. They have the best customer service out of any platform I ever used. So just get them a call. So yeah, I'm finna send y'all some stocks chart tonight. I'm finna send that right when we get off. I already got a list, so I'm finna send y'all some charts. So yeah, so now I'm glad you asked this, because some people don't know where to send the homework. So don't send it in classroom. Classroom is just so I can tell y'all what the homework is. Send it in homework submission. It's a tab at the bottom. It says homework submission. If you want to pick your own, that's fine. I actually encourage you to pick your own, but if you want some stocks for like, if you want me to find you some stocks, I will send you a list that you can use. But I kind of want you to find your own. Like I really want you to find your own. Not even gonna lie to you. I want you to find your own. But I sent some just because. Somebody is raising their hands. All right, everybody else, y'all are dismissed. Anybody that has the last questions, I'm gonna let you ask them. Ebony. Ebony, you can talk. All right, Ebony, don't want to talk? Okay. Hannah?
Thanks, Jay. I just got a question. I hope I can ask this in the correct way. So I noticed that when you were charting and did your levels, right, you didn't really like give the direction of the stock. So, and that's where I get kind of lost in sometimes. So I think what you did, you did your levels and you're like, however the overall market moves, then once your levels are there, if the markets is in, like, say, for example, in a bullish, like looking at the chart that you have right now. So if a market was in a bullish tomorrow, you'll be like, okay, we're right at 197. If it's bullish, that next target, we know it's right at 200. The next target is going to be the 204. So do you know what I'm saying? So it's not so much, I noticed that you didn't mention that. Like, that's why I keep bringing up structure. And sometimes I get all caught up looking at structure, but really, should I just be focusing on getting those levels in there, right? And just then waiting to see what the market, like, for example, SPY is kind of moving. We're like, okay, the market seems to be bullish. then we're going to go with that, and we look at the structures based on that, the movement based on that. Do you know what I'm saying?
Yeah. So that's where it comes to making your levels and have them there. So like, if the market is bearish, our level is going to tell us where it's going either way. That's why I say make multiple levels, because it's going to tell us either way. If BA decides to bounce off of this 197.60 level, then it's going to go to 200, right? But if it breaks below that, then it's going to go to that 194 level. So that's kind of how you want to do it. Like overall, structure, overall, the market is actually still, let me go look. I haven't looked at it in a minute, like the overall
I
picture.
mean, particular like BA, whatever, who's that? That's BA right now. So that's what I think. I'm getting so caught up in what that particular like BA, what is BA doing right now? Like, and looking at BA, it looks like it broke that so it looks like it's like going down right now, downtrend, right?
Mm-hmm.
But I shouldn't really be focused on that. I should be focused, well, I still should be focused on that, but also, so tomorrow morning, if everything is bullish, I'm just going to look at my levels to see whatever it's going to be. If it's bullish tomorrow morning, we're looking for that next level up. If it's showing like it's going down, the market's crazy red, we're looking for the next level down, right?
Okay, I get what you're saying.
You know what I mean?
Yeah.
Because I'm getting so caught up in the structure of that particular stock that I think I'm missing the other, you know what I mean? Everything else.
Yeah, I understand totally what you're saying. So, for example, let's go look at this. So I do the same thing. The overall structure is, you see this now? Like BA is in a clear downtrend, right? The overall structure is a downtrend. So when you're looking at like the overall picture, we obviously want to take BA down, right? But if you know what the market, we do short-term swing trading. We do day trading, right? So we will also play it day by day as well, though. Like we won't just say, well, it's in the downtrend, so I'm only going to focus on puts. A lot of people do I was trying, I'm not gonna lie to you. I was trying to trade that way, like strictly off of, if it's in the downtrend, I'm only going to do puts. I swear I tried that.
Okay.
But I missed a lot of opportunities trying to do it this way. Like the best way to do is you have your overall picture. So like I said yesterday, if you go back in the chat where I actually put the charts in there, I said, well, BA is in this double top, it's in this downward trend. I want to take puts, but also I have my levels in case we bounce, right? I have my levels in case we decide to make these short-term pops. But overall, we know it's still going down. If that, I don't know if that makes sense, but
it makes a whole bunch of sense. Because you never mentioned, I'm like, why aren't we just sticking to waiting for a break for the downward? Maybe if it hits that resistance in a 5 minute, since we know it's in a downward trend anyway, why aren't we just looking for some down movements? But now you're making it clear to me, because that's why I'm just sitting here like, why am I so confused? We're in the downtrend. Why aren't we looking for trades that are in downtrend? That way we have a better chance, or probability is higher. You know what I mean?
Yeah. So definitely, if you were in puts and the overall structure is saying a downtrend, then obviously that gives you that more confirmation. But it's just the way the market is. I promise you, the same exact way you're thinking is. So I don't feel like you're wrong or anything. I try to do the same exact thing. And literally, we might say that it's going down all the way down here to, these lows or whatever. And which it might will. But, it might take a couple of months to get there, maybe a couple of weeks. So we know in between, the stock not about to just drop like that. VA can pop, another $10 in a different direction. So you're missing out on those short-term opportunities.
Gotcha.
So that's why I say, you want to just have your levels and you're just ready, you're prepared to play it either way it goes. Like you have a bias. Like today, prime example was coin, right? Overall, coin is in this bear flag, right? This is a bear flag. So overall, coin is bearish. But if we come here, let me remove that trend line. So I'm like, okay, I only want to take coin to the downside, right? But as you can see here on this particular candle, price went from, hold on, and this is actually a play. I did get into calls here.
It bounced right off of that.
It bounced right off that 181. It's still down. It's still bearish.
Right.
But this is a from 181 to 190. This is a $11 move to the upside, right? So yes, it's still in a bear flag, but you missed 100% right there. You know what I'm saying?
Gotcha.
So you want to have your levels so you're ready to
Oh
play
my
it.
God.
Wait.
Okay. It's clicking. I was just wondering why.
Yeah,
Okay.
yeah. So yeah, that's all it is. Don't overcomplicate it. Just make your
Yeah.
levels and
Just make these levels and see, and just whatever the market gives us, we're going to try to catch in
yes,
between.
exactly. Whatever the market gives you, whatever way the market decides to go that day, you take it that way with them, right? You're not trying to trade against them because it's like I said, like we were just talking about earlier. You could come back from a stock going, $1 or $2 in the other way, but that's $11. That's
Exactly. I can miss a huge move and some huge money waiting for, the market's, this is in a downtrend, this particular start, and I'm waiting for it to, and it may not that day. And I may have just missed a bigger push going up.
yeah.
So
And I mean, if you do, ain't nothing wrong with that. But I just like to tell people, like from the beginning, like trade what the market gives you that day, and if it's something that you don't like. Now there are trades where, like Boeing, for example, Boeing can push $10 tomorrow. I don't want it. There's certain stocks that I just say I don't want to take it to the upside. If it don't give me the upside, I don't want it then, right? For me, that was the same way I was with Tesla. So I literally witnessed Tesla go from 1,200 to 800 in my face, and I did not want to take puts. I don't want to take it to the downside, so I would just not trade this stock. So it's just really up to you. I know that's going to bring up the next question. Well, why don't you? Well, it's Tesla. They didn't pay me a lot of money. I don't. It's just certain stocks that I don't like taking to the downside or to the upside. Neo will only take them to the downside. I will never run another call on Neo to the upside. So it's really what
cool. Because you answered the question, because you said like Isaac go both ways, but you like to see what the market's going to do in the morning. That's kind of how you do things, and it makes a lot of sense to me.
Yeah, it's less stress on me because with both ways, a lot go through my mind. Like, is it going to keep going? Is it going to stop? Is it going to do this? It's just too much if ends. And, I like to have the way my trading plan, which we're going to go over throughout the mentorship, and you guys will see the way my trading plan is set up to where I'm going to trade it like in that direction. And if it doesn't go that way, then I'm just not going to trade it. Like today, and I lose money every time I don't do it. Like today, coin was a prime example. I literally said that coin is bearish. I really only want to take coin puts, right? So the market was pushing to calls, and I tried calls, and I instantly lost like 40% on calls, all because I didn't trade my plan, right? If it was doing calls, I should have just said, no, I don't want to run calls. I want to wait for my puts, right? And the minute, as soon as if I would have did that, I would have kept my small account money today, right? But I didn't do that. I broke my plan, and I ended up losing money. So that's why I say, but yeah, simple. Just make your levels and just trade what the market gives you, and go from there.
Gotcha. It makes it a lot easier, though. Really, it does. It's not a lot of thinking and trying to, what is this particular stock doing right at this moment? And that's what I'm trying to, looking at the structure. It went below that, like if it's going in a higher high, then it hits that higher low, and then it goes a higher high, but doesn't go a higher low. It goes a lower low. I'm trying to look at all that first to see what that particular stock is doing. So yeah, it makes a lot of sense what you're saying. So I appreciate you breaking that down for me.
No problem. And then like once we get over to like the chart patterns, Gary will really touch up on that part about overall market structure.
Okay. Thank you so much. I appreciate it.
You're welcome. No problem. KHXNG.
Yeah, what's good, bro? You spell my name out every time. Every time.
Oh, that's your real name?
Nah. That's kind of like an alias. It's King though.
It's King. Oh, okay.
Yeah.
Okay. What's up?
What's good, bro? So I know that you said this, the way that mentorship is set up is kind of like of course, different people with different experience and stuff. So I say I'm good as far as like the charting and everything goes, which is I know kind of irrelevant because you're gonna go through everything anyway. My question is, my biggest problem is always with like market psychology and kind of not necessarily market sentiment, but like when a lot of people always mention like kind of what how the market makers are thinking. with the how they think. I know they think entirely different than how retail traders think. So I was going through the syllabus, kind of trying to figure out exactly when we were gonna go through that. What week kind of touch bases on that?
That
Just
was God, I do have that. Let's see. I know psychology and emotions is at the end.
right.
What which one is that? I want to say with the tape, it's going to be, so that one is a little different. We're going to have in the tape session the week 9 and week 10, and the reason for that is because when you're reading tape, we're going to be literally seeing like the big money, the smart money. We're literally going to be seeing what they're buying and selling and stuff like that to make our trades. So that particular time, we're going to have to like know like their mindset. And also on when it comes to week 3, where say the breakdown options, we're going to be going over that and a little bit of that in week 3 as well, because we're breaking down options and then we're using the supply and demand dynamics. Then we're going to be going over a little bit of their psychology as well. And also we got a little bit of the fundamentals, understand the market from the fundamental standpoint. That's going to be this week, a little bit of next week as well. But overall, week 3 and week 9 is when we start getting into that.
Okay, so week 3 weeks. So the one that because I know market for I still kind of want to just touch on that, of course. So with the market being the way that it is, are we kind of will it be a little bit different with those market fundamentals, or will you just touch on it just as a general standpoint?
So I'm gonna touch on it I'm gonna touch on it as a general standpoint, just because what's happening in the market right now is not normal. So, I'm gonna really be really transparent with it. Like, I'm gonna tell you guys like what's going on now, but I'm also give you like what actually goes on like a normal time. Like right now, we're going through this interest rate, now we got
Right.
the war coming up. It's just not right now, it's just not like the time, like fundamentals are a little bit, all over the place now. Like they're really pushing news. They're really trying to shake retail traders out. A lot of big money are actually not even trading right now. Like they're literally, this is where they use tools, right? They're using their algos to make these trades. So that's why if you see in week 9, I got spotting algos. Like it's literally how we can spot algos on a tape. Like not like we're going to be spotting computers trading instead of right now. These are computers trading. If you look at the volume on a lot of these breakouts, like it be times in the market, I'm like, bro, why the hell this stock just break out? It ain't no volume. But
Exactly.
it's because it's the algo, it's the machine trading. It's not the actual people right now, right? It's the machine. So it's different ways on how I spot algos to confirm breakouts and whatever. And that's why I say I haven't been looking at tape for real, because we playing with computers right now.
Yeah. So being honest, because that's I kind of just took a step back from just being actively trading in general, just because when I feel like what I learned, what I know doesn't apply, or those rules aren't applying, it's like I'm just kind of losing money. So would you recommend now? Because I've seen y'all said that kind of like or today just isn't a good day to trade. Would you recommend just kind of taking a step back until maybe after that Fed meeting in March?
Yeah.
So
I've told, so like I got they probably on here now, they can hear me, but I got some people that I work with that's not really market savvy, that like they don't have the time to like actively trade right now. And what I told them was, I'm just telling you what I told them. I said, don't trade. Just wait. Don't trade, because a lot of people actually have like full-time jobs or whatever, so they can't really get in and get out as quick. You back then, back last year, we can get to a swing trade. You don't look at your account, come back, you up 100%, and it's still there. This market, it'll put you at 100%, and then the next candle, it give it all back. So I told them, don't even trade. Like they're not trading right now. They're not touching the markets. So I will, for you, honestly, I would say take a step back. You already in the mentorship. Take a step back. Take this time to learn. You're not missing anything in this market right now. I guarantee you. You're missing a headache. That's really what you're missing. You don't have to trade right now. The market not going anywhere. After the meeting, we should have some clear direction. I think we're going to be choppy for a little minute, though. Not going to lie to you. I think we probably going to go continue for a large chunk of this year. I feel like even in March, it might get a little better, but I still think overall, until like maybe like July, August, it's really the chops that continue throughout then. I'm just being honest. Me and Isaac was talking about this yesterday. So I would use this time to really like focus on learning, getting better at things that you lack. If you lack chart patterns, get better at that, just get better at certain things that you're lacking on. And if you have a small account, start stacking up that money. So that way, because I'm telling you, more money, more opportunity. I know Isaac tell y'all all the time, 150 to 100. Look, I'm telling you right now, it's a lot less stressful when you got more money. I'm just gonna be honest with you. If you have more money to put in the market and you know what you're doing with the money, see, people not afraid to put money in the market if they know what they're doing with the money, right?
Yeah.
And put it in. So I would say take this time to just fund your account. You don't have to trade your account. You just start putting money in there every now and now and just learn right now. So when the market comes, because when it picks a direction, you're gonna be more than enough ready to make money, right? You're gonna be able to make it quickly. You're gonna be like boom, boom. I just made 10 grand a day. I'm done, right? So that's what I recommend.
No, I definitely appreciate it. I know last year it seemed like always during the summertime things just be going crazy. Like even
Crazy.
paying attention to how the percentages y'all was getting last year during the summertime was crazy, insane. So I'm kind of hoping that, toward like you said, kind of towards June, July, things start kicking up again. But yeah, I'll probably just take that advice. I definitely do appreciate it. I know this mentorship, it will help. Like I said, the market been crazy. I'm like, yo, maybe I'm doing. Let me just take, empty my cup, take a step back, try to relearn everything again. Maybe I'm doing something wrong. So
No,
I know this mentorship definitely will help.
No, it's definitely the market is definitely harder to trade. Like I'm not gonna lie, like you can ask Isaac at some point. I was like, look, I'm finna just take my money out and just go to like out of town for a minute. I mean, at one point, like I can see out the messages. I'm literally it was some like one day. I think I was on like a losing streak. I still kind of am though. I ain't gonna say a lot of y'all.
Yeah.
I don't like my performance. Like it's just been really hard, because I'm not really a 20. I'm not gonna lie. I'm not really a 20% take profit, 9%. That's just not me. So I've really been struggling with that. I'm literally like, I'm like, damn, bro. Like the stock don't want to go to the price target. Like, damn. So it's like it just stopped in midair. Just it just chopped. And these mid-air reversals. I used to get in my swings. That's nothing me and Isaac been talking about. I used to get in my swings at 9:00 in the morning. Now I get into a swing that early. It ain't the same play. It ain't the same play later on, right? So, just taking a step back. That's all I like. Don't give up on the market though. Just take a step back. I wouldn't say the market, but I would say you don't have to be actively trading. Take a step back, learn. Paper trading helps right now in this market if you want. I mean, literally, if you plan on trading, for a while, this is like the time for you really to take advantage of learning. Because when the market is going to go back to normal, 100%. It always do. Like 100%. I haven't, for people saying like, OJ, you ain't been trading that long. I have people that been doing this for 10, 15 years. Actually, one of the guys that I've been with before that's been trading 10, I think he's been trading for 17 years. He's been in the hedge fund, all that. He's not even trading right now. He be just laughing. Like he laughing right. He don't even trade right now. Like he's not even messing with this chop. Like he literally in Puerto Rico chilling right now. Like he's been there for like 2 months now. Like he literally has not took a trade this year. Just chilling.
That kind of put things in perspective. Like, the seasoned traders is letting us know that basically, when you chill, when it's time to chill, it's time to chill. Like you said, the market's going nowhere.
Yeah, and we keep forcing it and keep trying this market, which is hard. Understand we haven't been trading as long as they have. So, like even he told me when he was trading, they have it in the beginning, he would just want to trade every day. He said, "What time it will get better? You will start being able to take your money and just kind of calling it for a week, maybe a month. Like I literally know traders that come on, maybe they might trade OTDE on Friday, make a little money, and just be done. Like they don't come back until like next week, right? I got traders that come at once a month. I mean, or I mean not once a month, once a year. They come and trade in December for the little, little end of the year rally,
exactly.
and they be done. Like, I mean, literally, they make 200K in December and won't come back to next December. So
That's crazy.
it's a job. Like you gotta say, you trading, you can do it whenever you want. You don't have to trade. You can do it wherever you want. That's why I be telling people, you don't have to trade every day. You can do it whenever you feel like it.
It'd be addicting. That's why that's why I do feel like that market psychology is really going to help a lot.
It is addicting. It is. It's trading. I've got a little better at it. I used to be on the charts all day, 24/7. I've got a little better at it, but even for me, it's still hard. Like what I like to do now is I like to lock my account. Like, well, no, I can't technically lock it, but like I like delete the app from my phone or something, so I don't make no more trades. I'm still learning, but it'd be hard. It'd be hard, man.
Nah, definitely. Like I said, I definitely appreciate it though, bro. Even with you sitting back, answering the questions and everything like that, I definitely do appreciate it. And I'm looking forward to seeing what else you got in store for us. I know you said you got a gift or a surprise for us at the end, so
Yeah, I got you.
I'm with it all the way.
All right. Last question of the day. Nick Johnson.
Hey Jay, can you hear me?
Yep, I can hear you. What's up?
Hey man, so just quick question for you, and Hannah kind of touched on it a little bit. So like today, for example, with one of my trades, I set my levels the night before, like, had them set, had gotten my entry, I guess, around the appropriate time, but I got caught up watching Spy, and like, even though I was on the 15-minute, I just kept, for whatever reason, just like using that kind of as an outlier rather than trusting my levels. Like I completely like turned off my other chart. And I was gonna ask you, like, what helps you essentially not, since SPY dictates most of the market, what helps you not so much rely on just kind of focusing on that and just kind of relying on your levels, if that makes sense?
So that is where raising your stop loss comes in. It's kind of like when it comes to that part, it's kind of like a mental thing, not really like anything that you can do as far as trading to really trust your charts. Just, you got to understand that, with trading, generally, a stock's supposed to go somewhere, and if it doesn't go there, it is what it is, right? What I like to do is I like to set stop losses and profit. So, if the stock pull back, obviously I still like, keep majority of my money. What's a good other thing? I mean, that question kind of hard because it's really that's more psychology.
Yeah, and I again, like I said, like I said, she kind of touched on it a little bit earlier, but again, it was difficult for me because I was like, man, like I said, because obviously we in the chat and obviously on the lives, like I said, we look at SPY so much to see what it's doing, because of that, like that, I rather that became like my, resistance levels or just whatever, solely because of that. So just trying to see what I can do to help. So I'm not so much focused on that and more so just trusting my levels.
Yeah, I would say definitely start utilizing stop losses.
Okay.
That helps take emotions out a lot. It sucks when you get stopped out, obviously, but utilizing stop losses help you eliminate the emotions of wanting to sell or, and just honestly, you get better with it at time. Like I'm not gonna sit up here and like tell you like it's some secret way to help you get better at that. It's really with time. Like eventually you're gonna eventually gonna get tired of stuff pulling back just to go higher. You're gonna see that a lot, and you're just gonna be like, okay, I'm tired of this. When I first started, I literally will sell every single time I seen a red candle. Every single time. I mean, I catch a breakout, see a red candle, and I'm shook instantly. Or if a stock pulls back, like I used to hate the pullbacks. I used to hate it. I used to hate the pullbacks. And at the time I got tired of it. I'm like, bro, damn, it pulled back and it just went up 200%. So yeah, eventually you see that so many times, it just you just kind of get used to it now. Now the current market we in now, I'm just being honest, it's hard as hell. Like I even me, like for example, I put a stop loss on Disney to sell my contracts, right? I actually feel so bad because I feel so bad. But basically, I told you guys that I put a stop loss on Disney, that I wanted to raise my stop loss on and get stopped out. Disney ended up pulling back, stopped out mainly on my smaller account, but I still held the 100 contracts on my bigger account. And I actually made $9,000 on Disney, but that's because I already accepted the pullbacks. But most people in the chat, they see a pullback and they get the freaking out, cursing me out and all that, right? So just basically to help you understand that stocks do have to pull back to go higher. Another thing that helps me is looking at other stocks, like maybe having like if we're looking at SPY, maybe not like solely looking at SPY, maybe go look at like some Amazon or like some Nvidia, like start looking at some other stocks, because SPY will do that. SPY will pull back, and if you're using SPY as a gauge, sometimes it'll pull back and you might, get shooken out or sell. So that's why I like to have stocks, other stocks up, like Facebook, like other stocks that are like the top holdings in SPY. I like to keep those up. And if I see those stocks aren't really pulling back as hard, then I can kind of tell like this is just a pullback. It's other ways. It's like a couple of ways you could do it. That's generally what I do. I'm looking at Tesla. Like if SPY is pulling back, but Tesla is still like it's holding, I'm gonna hold my position. But like it's hard, but you just gotta kind of trust your charts. I mean, that's just and set that stop loss and just call it a day, right? I know it's hard. Right. This market is the worst for that though, but you gotta accept it.
No, tomorrow, yeah, for sure. I'm definitely setting my stop losses once I'm in profit, because that's the thing. I was in profit, but I could have finished higher if I just either gotten out or, like I said, had it set. So no, I'm definitely gonna do that. But I appreciate that. Thank you.
No problem. Other than that, I'm gonna let you guys go. That is pretty much it. Now I will be record out this videos. I'm gonna put it on YouTube as private. I'm putting on YouTube instead of Zoom, because the videos are getting a little longer and sometimes Zooms be tripping. So I'd rather just put it on YouTube. That way y'all could just go get it and access it. So this will be uploaded tomorrow. So you can go back and look at it. But other than that, guys, I will see you tomorrow, same time. And we will be going over candlesticks. Tomorrow class will be a little shorter because we're only going on the candlesticks that actually matter. And yeah, so that's pretty much it. If you need anything in the chat, just hit one of the apps. Please use them. None of y'all still text Keith, man. Text that man, make him work, please. Just had to pay that man today. Make him work. Yes, please text Keith, blow his phone up. But so other than that, all right, guys, if y'all need something, let me know. Homework is due before class tomorrow. And don't be trying to cheat off of other people's homework, because it ain't gonna do nothing but, it's not gonna help. It's not gonna help you if you're cheating off other people's homework. But all right, guys.